All opinions and views expressed by the speakers are not representative of views and opinions of RBC Dominion Securities, Inc. All information and opinions provided in this video are in good faith, but without legal responsibility.
Unstoppable. Relentless. It's the ironclad investment discipline. Now that we've started a new year, most investment firms, financial advisors send out some kind of performance summary to show clients how their investments performed. In this short video, I'm going to share some pitfalls or mistakes that I hear people making, or just try to clear up some misunderstandings about understanding how to read your rate of return statements. So I'm just going to, a brief history lesson here in Canada. 3 or 4 years ago, our regulators governed all financial advisors in the country and said, you now need to show clients how their money has performed. And so that was great news for most Canadian investors. We were already sending that to our clients prior to that, but for a lot of advisors, they weren't. So better disclosure for clients. I've shared in other videos that, however, that has caused some confusion. And let me just share what I mean by that. So you're going to get a statement around right now, depending on who you work with. Let's say you're a client of ours, and you're going to get a statement that shows how your money performed in each individual account you had. Very common for us, for a family. One spouse has an RSP, the other spouse has an RSP. They each have a tax-free savings account. A lot of our clients have a holding company. They have taxable investments. So they might have 8 or 9 different investment accounts. And you're going to get a statement that shows how each one of those accounts performed individually, which is great, but how do you make heads or tails of that? Let's say the husband's RSP went down 5% and the wife's RSP went up 25%. And the tax-free savings account only went up 7%. And there's $1 million in the taxable account, but there's only $200,000 in the tax-free savings account. How do you know how your overall money performed? Well, the simple answer is you can't. Those statements that were required by our regulators to send don't tell you all the information. They're giving you one little silo of information, and then you're trying to make heads or tails of it. So it's great that you're getting that, but I would ignore that if you're one of our clients, because we send a quarterly report that shows your overall performance with all of those accounts consolidated together. And I get questions from clients, why is my husband's RSP, why did it go up 18% and my RSP went down 2%? It's because any good advisor is going to be doing different things in different accounts, often for tax purposes and sometimes for simplicity. We buy Canadian stocks in one account and US stocks in another. And then, so you're going to get different performance of these various accounts. So trying to figure out what your overall performance from that can't be done. And does it really matter how one individual account does? So this comes up a lot for our clients, which is why I'm putting out this video. Ignore your performance numbers on an account by account basis, garbage in, garbage out. Instead, focus on what we send, and you should have by now received it, or if you haven't, it'll be in the mail very shortly, your overall investment performance. And not only that, it shows you how you've done over the last 1, 2, 3, 5, 7, and 10 years. The other statement that I just talked about, I think it only started 4 years ago. So you're not even getting long-term data. So for clients that have been with us for more than 10 years, you want to know how your money's been performing. So focus in on the quarterly report that we send to you. And I always write on the front of it what your performance was. And so I make it really easy, even if you never open the report, or for the clients that we email it to, I type that. So that's what I would focus on. And another pitfall that I see with rate of return is clients try to make a determination of what their rate of return is based on their book value. I wish our firm didn't put book value on it, and I have the flexibility to take that off, but clients were complaining that I took book value off of the statement, so I leave it on there. It's fine, you got book value on there, but that has nothing to do with your rate of return. If you paid $20,000 to own Royal Bank stock and it's worth $40,000, that doesn't mean that you made a $20,000 return. We could have been buying and selling that stock many times before that. I'll give you an example. I'll use Royal Bank. You buy Royal Bank for 20 grand. We sell Royal Bank for $40,000, so you make a $20,000 profit, and then we buy Bank of Montreal for $40,000, and Bank of Montreal goes to $30,000. So now you're going to see your book value on Bank of Montreal $40,000 and market value $30,000. You're going to think you lost money. You've lost money on that one security, but it doesn't capture the money you made on the stocks that you sold before that. So trying to figure out your rate of return based on book value, and you'd be surprised. This comes up a lot with our clients. So that's you, don't feel bad. A lot of people have fallen that trap to that. You can't determine your rate of return based on book value. Book value is only useful in taxable accounts to show you what your capital gain will be if and when you sell that stock and what the subsequent tax bill would be. That's the only useful piece of book value. So please don't try to determine your rate of return based on book value. And then the last thing before I close this video that I'll say about performance, if you're managing your own money, I'm shocked at how many clients don't know what their rate of return is. And I say to you respectfully, how do you know you're doing the best that you can with your investments if you don't know what your rate of return is? And if you're with an advisor that's just showing you the basic table stakes, here's how this account did, here's how that account did, again, how do you know what your overall performance is? What's your 10-year compound return? Are you making money with this person over time? It's such an important metric. And really, I can't stress enough the importance of being able to fully understand what that rate of return is that you're getting from your financial advisor. Hopefully this has been useful as you're getting your statements and you're opening them up at this time of year. If not, please call my office. Happy to answer any questions that you might have. Thank you.